Good morning, traders. In this video, we're going to go over the results of my market open day trading plan so far after 93 test trades with real money. I want to take it to 100. We've only got 7 more to go. We're profitable so far. What plan am I talking about? It's right here. It's available on patreon.com/tradingarmor at the battle plans tier level. And it's a long plan. I'm not going to scroll through it right now, but you can see it's got 11 pages roughly. I think I edited it for the Patreon a little bit just to clean it up, and maybe it's 9 or 10 pages, somewhere around 2,500 words. So there's a lot of information there, and I use it every single day to trade with. If there was anything in that plan that was not there, I don't think I would be as good a trader as I am with the plan. So having said that, let's take a look at the results so far. We have learned a lot throughout this whole test trading. And you can see here that the average win rate of all of our days of trading is basically 45%. The break-even win rate on this plan, because we're trading all or nothing 2R, that means that when we win a trade, we win 2 times our risk. When we lose a trade, we lose 1 times our risk. So you only need a 33% win rate to break even on this plan. Anything above that is profitable, even if it's just a little bit above that. I'll give you an example. If you're up 40R if your win rate is 40% after 10 trades, you would only be up 2R, but after 100 trades, you'd be up 20R, 20 times your risk. After 1,000 trades, you'd be up 200 times your risk. That's with a 40% win rate. So I think that's pretty encouraging. Again, how much money does that equate to? It depends on how much you're risking. If you're risking $10 per trade, you just multiply $10 times 200 to find out how much money you'd be up after 1,000 trades. So that's $2,000. If you're risking $100, $20,000. If you're risking $1,000, $200,000. $200,000. So anyway, let's get to the results so far. Those numbers are pretty big. They're kind of sensational to say it would take a lot to risk that much. So that's just take that with a grain of salt. So anyway, the R value right now, we're only up 6 times our risk, but we've had a rough week this week trading this plan. We've done everything to plan, but it just hasn't worked out that well this week. The other thing is this includes every single mistake we've made along the way, including that one time where I broke my plan and I ended up in trader rehab for a week. So that includes the worst of the worst of this plan, and it's still profitable. So the actual win rate with all of those bad trades in there, the mistakes, the breaking the plan that one time, where we have won 33 out of 93 trades. So that's where this number comes from. Again, still profitable. If I remove those trades taken in error, then that bumps up the win rate a lot. And there's only a few. If I scroll through this spreadsheet kind of quickly and you just looked at the trades that are boxed in either red or blue. So I either box in them red or blue, and that means either that the trade was taken in error or there's something in the plan that I've changed since taking that trade, so that trade would no longer be valid. So that's the red and the blue. Now again, look, especially on this third trade, I think there's only 1 trade boxed in. So there's very few trades that are boxed in, very few trades that were taken in error. So I'm not removing that many trades, and you see the number comes up a lot. So those trades taken in error really negatively impact the amount that we are up on this plan. And if we remove those, again, we would be up 13 times the risk. Even with these win rates on the first, second, and third trade, which the first trade obviously is not that good. We are going to address that at the end of this plan. I'm not going to change anything about that first trade right now. We only have 7 more trades to go. It doesn't make sense to make such a critical change in the plan at this point, because that would skew the data and make everything wrong. If I make it so, for example, that I can't enter the first trade right now, and I start winning the first trade, this number is going to go up. But what I'm really doing is taking the first trade and moving it over taking the second trade, moving it over to the first trade. So it's just not a good thing to do at this point. So anyway, that's that. And then over here, what this is the win rate without any of the error trades. Oh, I'm sorry. This includes, I said that wrong earlier. This includes the trades taken in error, but removes the trades after the first 3 trades. So let me rewind and explain that just a little bit. So this number here is basically the same as this number without these additional trades that I took in the beginning. So if you look at the beginning of this plan, I allowed myself to take up to 10 trades. So here's trade number 4. You can see I took 3 fourth trades, a 5th trade, and a 6th trade. And I realized pretty quickly after 2 weeks of doing that all those trades failed. So why am I going to take those extra trades? and I just decided to remove those from the plan and only allow myself to take 3 trades. So that's where this data here comes from. If I would only taken 3 trades from the beginning, I would be up about 40% and I would be up 13 times my risk. Now, what is this information over here? This is kind of a hypothetical scenario where if we can go back and only take the trades that fit the plan right now. So this is the one that removes all of the trades. So it's more closely related to this number here, win percentage without errors. These two should match, I believe, so I probably need to check something. This number I know is more accurate, but I need to audit this. I'm going to do a big audit of this spreadsheet before we finalize everything after we've taken 100 trades, but I checked all these numbers today, and I know these are correct, so we're going to go by this. So the win rate of the first 3 trades without any errors. Oh, this includes trades after trade number 3. That's why this number is different, I believe. I'll have to check on that. Anyway, first 3 trades without any errors is 41%. So we're up 19R at this point on that. And these are the win rates of the first, second, and third trade. Again, notice I need to actually make this red because this falls below break even. So even in this scenario, that first trade is not making us money. It's losing us money. It would probably be down -1R in this scenario. So in fact, I can show you that here. Actually, it'd be 0R. I have that calculated there. So anyway, that's the results of the plan as it stands right now. If we were trading it from the beginning. Now, how accurate is that? Probably not, definitely not 100%, because you can't go back in time and say, well, this is what I would have done with this plan. There's a lot of other factors at play. But what we could say is that we're probably going to be somewhere around the average of these 3 numbers, which I don't have that calculation on the spreadsheet, but I can just do that really quickly right now. So we would be up about 13R, so about the same as this. So I think this one is pretty accurate right here. That's where this plan would most likely be at this point. And I think that's enough for now. The other stuff that I've got on this spreadsheet that's helpful is just this data analysis point. When the first when the first trade fails, how likely is the second and third to go to 2R in the same ticker? That's something that we started doing exclusively after. There's a certain point marked on the plan. I think it's right here. Yeah, that line got kind of erased. So ever since July 30th, I committed to only taking trades on one single ticker symbol. That way I could use the higher win rate of my second and third trade and hopefully make it more likely that I end the day either up +1R or break even. So if I just took one trade on 3 different tickers, then I'm going to be applying the win rate of this first trade, which is obviously not even profitable at this point. So that it would not be a good thing to do. So this is just me collecting the data. How many times have we done that? 23 times so far. And how many times did it go red to green on the second trade? 10 times. So 47.6% of the time that the first trade fails, the second trade goes to 2R on the same ticker symbol so far. And that's a good win rate because remember, 33% is break even. So that's extremely high above that break even win rate. And we don't have that much data for how many times we've taken the third trade on the same ticker, only 9 times. And out of those times, it's only gone green 3 times. So this doesn't have a whole lot of meaning yet, but if these numbers got a lot bigger and then this win rate stayed at break even, then you might argue then it's not worth taking the third trade. So, but we need more data before we can do that, and I'll keep on collecting this data as we move forward. So anyway, let me know if you have any questions about this plan or the spreadsheet. Again, the plan is available at patreon.com/tradingarmor. It is profitable so far. I'd rather, take it out to 100 trades before I say for sure it's profitable. But again, just because it's profitable for me doesn't mean it's going to be for you. There's a lot of nuance and subtlety involved and skill that you have to develop when you trade the plan. Someone could give you a plan that they might even be able to prove has been profitable for them for many years. They've been trading this one plan. They haven't even changed it. They just trade the same plan the same way every single day for years. It's been proven profitable with a big margin of error. They give it to you and you start trading it and you can't make any money with it. That's because there's a little bit more to it, and that's the part where you have to develop the skill and the discipline. The only way to do that is to start taking trades use real money. Paper trading is only so helpful because it does not give you the emotion of trading with real money. What I recommend to do for every new trader is trade with one single share and just collect the data on the R value. That way you'll know based on that if it's profitable or not, and if it's not, you're not going to be losing a lot of money. So even if we were negative here or zero, we might be up to $5 or $10 or something like that after 100 trades. That's not going to blow up your account. But if you're losing $10 per trade after 100 trades, you might blow up your account. So anyway, that's that. Let me know if you have any questions. Hit the like button if you thought this was helpful. Subscribe if you haven't done so already. And just one last little bit of information. Once we get to 100 trades, I'm going to start testing a very similar plan that's going to be modified and made a little bit safer and more strict for the small cap market. That's the stocks everyone wants to trade, the low floats, the small caps. They offer a lot of opportunity to make a lot of money in a short period of time, but you can also lose a lot of money in a short period of time. So I am going to try to kind of strengthen this plan and make it even safer for the small cap market and see if it's profitable. We're going to do the exact same thing, trade one single share for 100 trades. And once we've done that, we can determine whether or not it works or not. So as always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.